Hey, good morning, everybody. So, market's up 5 days in a row, and I guess that's a good thing. Well, the momentum slowed down yesterday. It was kind of wild. Um, but anyway, for you look at the in a one time frame that compresses the data, and you look at a smaller time frame and see what went on. It was yesterday was a little wild. Anyway, the way it turned around. Just to take a peek, I'll just switch to this one here. And like it started off the day down. I think today's starting off the day down, and prices just come down to this level. Of course, you want to look over to the left to see if there's any support. It actually breaks through support, and then just right back up again. Takes out the highs and back down again. So pretty wild price action there. But I don't think it will be today. Depends on top. I don't know what you guys are saying there on YouTube there, but so again, it was the up and down move, and so now, yesterday's high or prior day's high is always the first reference point of price resistance, and the prior day's low is always the first reference point of price support. So, and then I've just marked off that low and then that low as we get to SPX. I'm going to go through the whole routine, but as markets move down, I see premiums picking up here, or had picked up. So 4210 is below that bar, and 4205 now, Jacob. Okay, so as markets come in a little bit, the premiums pop, and I think that's pretty much a no-brainer. Since you got to get through that low, you got to get through that low, and you can see this is what we talked about over the last couple of days. The fact that when the markets moved up like this, that it created this void, and then it would have to create support to move higher, and it did that. And so as it does that and it starts moving up, what we can see is that strong momentum that creates a void, and then as it comes to some reference point, in this case, it got through 4,300, but it's an area, of course. And then we watch the distance between how far it goes up, and then forms a red bar and starts to pull back a little bit. That just tells us about slowing momentum. And then we see, momentum picked up a little bit, but still decreases a lot from here. And then ultimately, does it actually break a prior day's low and then a prior weekly low, which I highly doubt it will break a prior weekly low, but we'll see if this week closes red, which it hasn't done in a while. So again, multiple time frames and saying, how is it moving on the hourly? Is it creating support? So on and so forth. And then on the daily, where is it in relation to resistance? And once it gets to some reference point, does it actually break a prior day's low? Does it close below it? It's just that systematic analysis that we call factory work. So 4330, which is right above here. I don't know if there's still premium there. 55 by 65. So last I looked, it was gapping down under this low or thereabouts. It doesn't mean it can't turn around, but after multiple days up, gapping below a prior day's low, historically, that is a pretty reliable start to a turn, and we'll see where it ends the day. So spiders, move down a little bit, and you see my cursor. It's actually now down to close to this bar's low. You can see as I move this down here to where it is, it's gapping below that bar. And so what you now want to do, right, if you want to short this, the first thing I look for happen is if it's gapping below here, which it is, it could rally up into yesterday's low and then begin to turn over. So let's see where this is here. So look at the 15-minute chart, because I've got this on 24-hour, and you see it's down here near this pivot, so support. And what we do is you want to look at that low and that low, and however you want to do it. It's kind of look at like areas. So it's down here, and if it rallies up into here, right, let's just say it's around the 10 o'clock reversal period, you look for some kind of a turn to short it. And if it keeps going, then I look for this one. And from the bearish point of view, what we want to see is that it does not get back up into here. And I mean, it kind of doesn't matter if it's green, because look, if it goes sideways for a few days, which is one of my comments yesterday, was that if it went sideways for a few days, it becomes more bearish. I wish the symbols on your screen were bigger. What symbol? These symbols? What's on the top here? Oh, I can oblige you for that. Scale status line. No problem. Well, all these charts are linked, so I'm going to make this one bigger. And X. All right. There you go. There you go. No problem. If you can't see what it is, I know we're going kind of quick here. Okay. So again, where is it opening? Down below this pivot. And so breaking the trend on the hourly time frame. And so coming down here. Yeah. Nice. All right. So we'll see. It's gapping below down there, gapping down to the prior days. That's a pretty sizable gap and a turn, which we don't see any of that prior to this. All right. So this was just took out the high in a red bar after it took out these two highs. That's normal. One of the things we talked about, I think about a week ago, was that the corrections were becoming milder, in that sideways versus pullbacks, and then over here virtually no correction, and these were early warning signs. And then you get a not so much of a momentum move, but it is 5 days of higher highs, higher lows. And so it's not like this, which is to the downside tends to be more violent at a low than to the upside, where sellers where those that are long and throw in the towel tend to give it up in a more obvious, abrupt way, whereas buyers tend not to give it up so quickly. So starting with a little bit of a shock, which we haven't seen before, is reliable. And then we'll see, as we go into the end of the week, if this chops around here. So I wouldn't get too enthusiastic about things collapsing here. So again, back to SPX and being looking for spreads down here, I think will be fine. Do the buys look more controlled so they can suck you in? The only thing that can suck you in is between your own ears. No one gives a shit about me and you, TS Long. So price patterns don't form, based on, I'm saying me and you, but how the masses, what they're thinking, right? This is just the psychology of what everybody's thinking, and price patterns display the universal views. So we're, here, a little bit of a pullback, or deeper pullback to major support, sideways at resistance is bullish, and things become more and more bullish. And then at some point, you get a reversal. Now, at that point, breaking a prior day's low or gapping below it doesn't change this up move. But the deeper it comes down into here, you'll see the more bullish traders start becoming concerned. And so that's where the depth of retracement comes in that we measure, and all the things that we talk about in MT Live. Market internals. So here you get a pretty larger bar, a turning point. The day's not, it's just beginning, so we don't know what this is going to look like by the end of the of the day. But just based on breaking all of these lows here, expecting a lower high and coming down, whether it's to this pivot down here, which is in the middle of this bar right there, and that low, right? This pivot is that bar's low. So coming down there would be the next stopping point, and we'll see buyers step up there and so on. So again, it's step by step where we're looking for, as prices are going up, how do they correct? Do we get topping tails ignored, red bars ignored, trend breaks, so on and so forth? And we look for, hey, is one market taking it on the chin more so than the others? And so this, again, where is this going to end the day? It's been up here a second day. Yesterday was up here, now a third day. And so when we talk about turns, one of the things that we focus on is how many days did it, hang up there before it broke. And so the idea of a head and shoulders top or an M top is a way of viewing price patterns that create larger areas, which will be supply as it turns down, that can drive prices lower, right? The bigger the pattern, the more interaction there was between buyers and sellers, supply, demand, and all of that. And so within an uptrend, as prices begin to go sideways, the longer it goes sideways, you have those that are buying there with a belief that it's going to go higher. So they were willing to buy at higher levels. And maybe it does. We don't know that yet. But as things begin to go sideways and then they break the low, well, that's obviously more bearish because those buyers turn into sellers and have the potential to drive prices down through prior support. Which I'm going to jump ahead to Bitcoin here because we've been talking about the fact that it hasn't participated the way it has in the past. And now that rejection that happened a couple of days ago, and it's just kind of hanging here, kind of waiting for, who's going to blink first with the sellers there. But I'd be concerned if I was long this for sure, with thinking, hey, it's going to push up into this void, which would have been a reasonable thought. And now it's not happening. So do I start scaling out of a position? Let me just kill half and see if it flips back up again, I'll put it back on. But I think it'd be reasonable, those, that have been buying around here, to start reducing risk, because if the markets are going to follow through lower, well, I don't see how this is going to hold up all of a sudden. And, this, in the context of getting down to 20,000, which is going to get kind of ugly. But it could easily come down to this level here if it starts to pick up some momentum. Crude oil didn't make the turn yesterday. I'm interested to see if this can make a turn and get above a prior bar's high. So far, it's weak. But if the markets are going to turn lower, right, I'm thinking, what can throw some gas on the fire? Well, rebirth of inflation concerns and some pickup in oil. Not that it could go way back here, but if it was to get some kind of reversal, that would throw some gas on the fire. And I keep showing you, this chart. I've been showing it since down here, saying, things are going to get risky, and we saw the correction in the market. It's the 3-month interest rates, and it's popping up here. So as I think there's Fed minutes today from the last meeting that we'll hear. So we'll hear whatever they're going to say. It's the past, but markets are saying they want them to do that 3/4, and saying that, look, they're not going to get out of this inflation thing. You have some people on the TV talking like, oh, it's not going to be so bad. Others are saying, hey, they got to push it. And well, you can listen to all the media you want. Just look at the charts. Yeah, Siegel, which has been bullish. He's a broken clock, right? I mean, back in 2000, he said the Dow was going to go to 36, 40,000. Hey, he was right 25, 30 years later. Anyway, so interest rates broke down, popping back up here again. That's the 5-year. That's the 10-year. And so breakdown failure. But you can see the size of this top. And now it starts coming back up. And is it going to make these are difficult patterns, meaning is it going to make a lower, rounding high and go lower? Is it going to come back up? So you just stay away from it. But, set an alert up at 3% here. And as if this starts moving up, the depth of retracement from these pivots here to this breakdown failure starts to look more like interest rates continue to push up. And, that could be another thing that, throws some gasoline on the bearish fire. And so the Dow's down a couple of 100 points, really not a big deal, but, like everything else, it's up a bit. And so we'll see where this ends, the depth of retracement, but it's, look at the diamonds, just to look at the gap, and you can see it's gapping down near the low of a bar that's kind of reaching up toward the sky there. And so that's bearish. Yeah, we'll see what they have to say. I mean, what they, they've had these different guys that used to be Fed chairs, and I think from the ones I heard, most of them are saying that, they're going to have to keep pushing it. So, I mean, anyway, they always go too far. They're always late. Yeah. All right. And so transports. So this is the kind of bar that you really, whether you're a swing trader, because we talk about patterns are universal to all time frames. The smaller the time frame, the less significant. But this is the kind of bar that you see on whatever you're trading, where it's in an uptrend, it's a little extended, the momentum slows down, and now there's a range expansion bar. Just watch that bar, because historically, when it takes out the low, things are going to pull back. Now, it's still trending up here, but at a turning point, a range expansion bar like that gets negated is going to bring in sellers, because that bar was, now they got excited again. And by the way, I spoke yesterday, watch for the increase in call buying. It wasn't as low or as much call buying as I really would have wanted, but you see that's day to day, and it was lower intraday here. So as prices are running up into the 200 MA, call buying increases. And so, this is just touching that band. I would like to have seen it push higher, but anyway, there was an increase, as things are pushing up there at that 4430 number. And, the majorities that use options just historically jump in at the worst possible time. And not all option traders, but what I'm saying is that you see the extreme in call buying happening, and that's why we watch it. Because when we call the wrong way option traders, which are not all of them, they jump on board near the end of the move, right? Up and down. Also, notice this breadth forming this head and shoulders type of a top. These patterns tend to be reliable over time, and it's like a head and shoulders top is a distribution pattern. So the height of the bullish breadth topped out here, and now it's been going up on declining breadth. And so it came up again, it's just been backing off. And these kind of things, you gotta put them in the context of what's happening, because they never, well, I shouldn't say never, rarely ever are going to give you a day, a pinpoint accuracy of a turn, like an intraday internal, like the tick will. Right? Dollar continuing to go up here. Don't expect much from metals and mining and gold and silver. And that's the case. So we'll see how the day ends. It's yours, Dan.
Good morning. So yeah, we've been very, very specific and cautious on new longs because of, I've been calling the market musical chairs, that we're going to get this turn any day. I hope, I was thinking the last 2 days with the gap down, we're going to be the start of it, and I was wrong. You just gotta take it. So with the gap down, that's the best so far, because it's gapping under power bars low. All right, so I still have a number of bullish trades here, but the broader market's going to be my problem when I go through the checklist. We did start putting on a couple of shorts. EXAS we shorted yesterday, looks good. OGN was in. Greg, I'm still getting this reclaim host or stay co-host.
I don't know, Dan.
All right, I'm coming out as D. All right, I'm just gonna exit and hit neither one. All right, we're short this one, the weekend letter. MicroStrategy, we put on a call spread yesterday. That's gapping down, looks good. Snow, we were trying to do a call spread yesterday on the gap down. We didn't get the credit and I canceled it. But all the other opens look fine. EA, I posted long. All right, so I even put in the alert. It's not going to trigger unless it's really strong. So that's over yesterday's high, wide range bar out of the base. OSH, this is what we call a rounding top with a breakout failure and a price void. So that's a call spread candidate and maybe 30-minute low. UHS, I posted this as a short, breakdown daily, weekly after upside shakeout. You got a void here, maybe, I don't know, 103, 105 maybe. Yeah, McGraw, of course, you know the drill. Any directional as a candidate. I looked yesterday and the premiums were not very juicy. T2 is on my list here. Got a downgrade today. Maybe I prefer it, McGraw, maybe as a 1, 2, 3. But if it holds up, then yes. Yes, that's a put spread idea. I'll go ahead and put that in a window. Yeah, 30-minute high. Would love to do 2 DTE. Today, let's see a couple earnings. Target gapping down. I said yesterday in the green room, I thought there was like undue excitement here into earnings on the tail end of Walmart rocking, and I was right. I said the same with Lowe. I said the same thing. I said, look at this crazy big move into earnings. And I even said yesterday, I hope this thing gaps up $5-10. And then we'd be shorting a call spread. And it did gap up $5, $6, whatever. And now it's giving it up. So when I see patterns like this, the bigger the gap, the better. I like fading. TJX, another retailer, no pattern. This meme stock looks like they're back in play, but since today's Wednesday, we only have 2 days of risk. Gapping up here, I'll be looking for an intraday setup to sell out of the money calls on this, because the calls are going to be off the chart high because of this volatility. SFIX, I was doing some scanning pre-market and I found that there's really nothing to do on the daily, but look at the weekly. And let's add it to our longer term list. Mattel. Another wide range bar converging MAs, beautiful bottoming pattern. I see one print down here. I set an alarm at 2380. See what it looks like if it hits. Snyder, strong. So these are examples of they're strong. Look, this is beautiful. But over yesterday's high, then they're still strong and they're negating a market gap down. But I've got really no interest in like swinging these if we're at a turn on the market. Look at work, another big bottoming pattern, looks great. Put that in a window, set an alarm at 4310. $43.10. I posted FTS. Beautiful bottoming pattern. Look at that. And then these are both great examples on converging all three MAs, showing contraction with the pattern in a price void. This looks great. So this one I did post over yesterday's high. To this was Tuesday stop, Monday's low. Target 48.50, 49. It's beautiful bottoming pattern. KFY, look at that strength. I know the 200's there, but it's been going sideways for 3 weeks. Another one looks great. Set an alarm. Okay, I will right now. KFY, this one's always a hard one for me to type. EXAS, low alarm. We're in that short already. 6650 alarm. And EXAS, UHS alarm. All right, so this one, let's cover another third 5-minute high on the gap down, but it looks great. I mean, hopefully it won't take out a 5-minute high. UHS alarm, let me look.